Hi there, Shingirai here again with another update on portfolio performance over the past week. Coming into the week, geopolitical tensions took center stage once again with the G20 leaders meeting, and we saw a meeting there between China's Premier Xi Jinping and US Premier Joe Biden, which seems to de-escalate some of the geopolitical tensions which are building between the two nations, and which is broadly taken as a positive coming into the week, alongside the 16 different policies that they'd put in place in order to support the war-ridden property markets in terms of easing access to credit for developers, as well as 20 different measures for COVID zero-tolerance adjustment policies. But moving into the week, we saw on a one-week basis, 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 5 returning 3.61%, down to CBAM 1 returning 1.96%. We did see some respite there in terms of our European equity positions on the back of the news that we are expecting firstly a milder winter season than expected, higher than expected also reserves of natural gas, which would somewhat alleviate the energy crisis that Europe has been seeing coming into the year and ever since the 265 days since the February 24th invasion of Ukraine from Russia. We also got some positive earnings results, also supporting European equities, and that would see 2 out of our 3 positions being European equity positions. In terms of headwinds for performance, that story again we begin to see with weakness in emerging market debt. Spot over into emerging market bonds, down 1.29%. And then in terms of our equity Indian subcontinent, we saw a bit of headwinds there in terms of retail inflation, which is up 6.77% and above the 2 to 6% range from the Reserve Bank of India for the 10th consecutive month. And that would see our equity Indian subcontinent down minus 1.25%. Moving on a quarter-to-date basis, 10 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 3.24% for CBAM portfolio number 1 up to 7.71% for CBAM portfolio number 5. In terms of top performers, again, that European story for the recovery of shares which are probably derated anywhere in the range of 50 to 70%, up more than 19.95% through Bailey Gifford and Allianz on the quarter-to-date basis. And we're beginning to see that strength in the UK domestic economy on the back of some political stability and some assurance on a global scale that things would be beginning to look up a bit, despite the hotter than expected inflation number we saw this morning coming in at 10.7%, at 11.7% rather, and that would see the HSBC 250 returning 13.94%. But then turning around to China, issues that we've been discussing throughout the year still haven't faded away, but if you looked at these Chinese numbers versus what we were reporting last week, an improvement of about 1.5%, with both our positions down more than 4.2% for Columbia Threadneedle and the HSBC MSCI China, and then also those headwinds we've been seeing for Hypnosis Investment Songs Trust, down 3.48%, despite that also being a 1.5% improvement versus numbers we were reporting last week. In terms of issues we'll be looking out for going forward, or recent data portfolios, we've taken off 10% of our USD hedge on the cable due to the strength that we've seen with just over the past couple of days with cable testing 1.2, and also ultimately just waking up this morning with cable at 1.18.7-ish, and that was a net positive for cable, which has been up 4.86% on a quarter-to-date basis, and also just monitoring that escalation of conflict on the eastern region of Europe between Russia and Ukraine, with the potentially 2 wayward missiles landing in Poland, and just something that the global country representatives will be investigating over the next couple of weeks.